Hi, welcome again to another edition of Market Analysis for today, July 15th of 2025 on Geo Benacourt. And this is a recording done by Vantage Markets. We're doing it an hour and 15 minutes prior to the USA session open. All right, well, what a week we are beginning to have. Is this going to be another week like we had last, making all-time highs? Well, it appears so. The Nasdaq is showing us that way. Obviously, we do have a boost from still NVIDIA's record-breaking 4 trillion, first company ever to hit that marker, beating Apple, Microsoft, Facebook. But obviously, the whole deal behind it is that NVIDIA's permission to resume their H20 chip sales, and that's obviously a good indication between the Americans and the Chinese counterparts. Obviously, there was a deal made on for America to loosen up restrictions on rare earth exports from China. Chinese economy is doing fantastic, is doing great. So today we got the CPI, so that's going to add some volatility to the markets. The consensus is going to be 0.3% month over month. Now, anything higher than that, obviously, that's not going to be good for markets. But anything lower than that, it'll be good for the markets. So obviously, we're going to be seeing that in this case that we are here in the Nasdaq. Since we are in all-time highs, we don't have no previous history to go back to. Then, well, but that's what the trend-based fib extension tool is used for. So let's measure all of yesterday's move to today's move and see how much are we going to be speculating for us to reach. And then we have here our values. So we saw that the market rate has fluctuated towards the 50% marker, which is not a Fibonacci number, obviously. The golden ratio, however, it is, and that's where obviously everything comes to. So let's use that as 23,236. Okay, just do it by my hand. 36. I'm just gonna put round value. Oh shoot, where did it go? I saw 236. There you go. All right, then let's use again the 3.82%. Even though the market, oh shoot, wait a minute. Even though obviously the market has, there you go. The market has already fluctuated above that, so that's 23,144, and we basically where we opened. So let's just use the swing high of the day. Now, as far as support goes, well, let's use the retracement tool. The retracement tool, let's see how much of a retracement we're going to be having. So on the uptrend, we do it from the low to the high. And then here we have our values. So if you notice, I have them colored. So everything in the yellow zone, the yellow area here, whichever trade, if you take a trade within this range, your target will be the yellow, in this case, the golden ratio. If you wait for a deeper retracement towards the blue line, well, if we are going to continue this move to the upside, then our target will be the blue level. And if you wait for nearly a complete retracement, which if he actually retraces more than the low than where we began our tool, there's no trade. But if he does retraces all the way down to the red level, well, our first target will be the red, the negative The market actually today opened with a tiny gap down. This one closed 23.034. This one's open at 23.032. And then obviously it continued trading. It had a low of 22,996. So 23,000 seems to be that psychological value. Then let's just use that. We've been there before. So let's use that, and then let's use as a second level the Fibonacci golden proportion, golden ratio. And then there we have our levels for support and resistance for the day. So I guess the momentum is on our side for across the equities. So you could also think about it on percentage wise if you don't want to use the Fibonacci retracement tool. So 2-3% pullbacks, looking to buy in those dips. We have the S&P also making all-time high. So let's use the tool. Since we win retracement, let's just use the retracement tool first. And then here we're gonna be using, again, we're gonna use 6,300 psychological value, and then the Fibonacci, the golden ratio, the 0.618%. Now let's use trend base. Remember, from the low to the high to the low. And let's take a look at where our levels could be hitting. So again, the swing high from today. I guess I only have one. Yep. Let me clone this one. And then, okay, well, it happened to be almost right on the smack value, but we want to do 63.50. That's what the golden ratio says. So that's why we're gonna be placing our resistance that we have, our levels for today. So again, on the S&P, the momentum again is staying long, being bullish. What are we seeing on the S&P and the Nasdaq? They're hitting new highs. Maybe start posting big gains. Obviously, we having the earnings season kicking off, so keep that in mind. Let's take a look at the Dow. So the Dow actually fluctuated to the upside. It hit our level of resistance that we have previously placed, and it's looking to push lower. So let's use 44,400 as a possible level of support. Let's take a look at 44,400, right? And then let's use the medium, or the 20-day moving average within the Bollinger Bands. Let's tighten out this level of support. 45,000. That'll be our second level of resistance if we do happen to fluctuate higher. Next week, the banks were going to be posting, so keep that in mind. So crude oil is actually trading lower. It seems to be consolidating around 66, 67 since we've been here 3 days, and that's where we are actually today. And we are actually just on that support level. So let's use the 50-day moving average and then 65 as our second level of support. Resistance, well, this double top here is looking to be a level, and then let's use the medium, or again the 20-day moving average in this case. So as the Nasdaq continues to move higher, it'll obviously we have a inverted correlation between the Nasdaq and crude oil. So crude oil pushes up, Nasdaq goes down, vice versa. So crude oil, I'm actually just looking at it to be sideways trading. Nat Gas, let's just use the 50-day moving average is right there, giving us that level of resistance for the asset. Let's use yesterday's open which the gap hasn't been closed. I'll keep that in mind. 330. So it did open with a tiny gap up. It has been completely closed, and so let's see if it will revisit yesterday's high. So conscientiously going long. Gold, well, gold is in a range within yesterday's candle body, trading range of the body yesterday. So again, I'm just gonna time up a level of resistance for the top Bollinger Band, upper Bollinger Band, and see if gold will break out when the news come out, CPI. We'll see some volatility. Then we'll have silver after peaking its head above $39 yesterday. It closed in the red. Obviously, this is profit taken. That's definitely profit. Wait a minute. By doing this, let me bring down the level of resistance to 38.5. The second would be obviously yesterday's swing high. Support, I'm going to leave the first level where it's at, and then I'm going to use Friday's open, around Friday's open, which is actually 37,184. Okay, in the same place. All right, so let's see if we have another leg up on silver. Copper, sideways trading within, basically it's consolidating around 550. Possible breakout. Looking to revisit that high from July 8th. That's a setup right there. Breakout to the upside, breakout. All right, then we have Bitcoin after fluctuating, making new all-time highs, 123. It has retreated. It was expected, obviously. So profit taken is what this is happening. So 116-ish level of, I'm gonna use 12,200 first level, and then that swing high, or that all-time high. Then we have the currencies. The euro looking to stay, trying to reach that 117 again. It's just been sideways trading, holding its own. Well, let's see if the dollar index takes a beating today. If CPI comes out hotter than expected. If it doesn't, it does. Let's see what's going to happen. Pound looking to recover after having been on a downtrend, really. So let's just use yesterday's range, opening the 50-day moving average, and then yesterday's swing high. As far as support goes, 134 is that psychological value, and then the lower Bollinger Band, and see if they'll come towards the 50 marker, or the 50-day moving average. And then we have the dollar index, which is flat right now. It did have a leg down. It is recovered so far. So let's see if 98 will be a level where it will hold. If the CPI comes out better than expected, we could probably see a spike, vice versa. Let's see what will happen. We'll have a great trading day. I'll see you tomorrow.